Hi there, good day everybody, and thanks for joining this North Russian Sanctions webinar. My name's Mark Church. I head up our sanctions advice team here and have spent a huge amount of time over the last few months dealing with sanctions issues and queries, and I'm joined today by two of my colleagues, Mike Salthouse, who will be a familiar name to a lot of you, Global Head of P&I at North of England, and also is the chair of the International Group Sanctions Committee. And I'm also joined by Dave Richards, another of our directors in the P&I team. And all three of us have been spending a huge amount of time looking at sanctions issues over the last few months. Before we get started, just a couple of really quick housekeeping issues. Firstly, this session is being recorded. And secondly, we really hope that this is an interactive session and we have lots and lots of questions from you, which we will do our best to try and answer. If you do have a question, please just pop them in the chat box and we will come to them at the end of the session. We're going to just split the discussion into three areas. I'm going to kick off in a moment by just trying to really take a helicopter view of the sanctions landscape at the moment, where we are, what we need to consider, and just try and illustrate some of the complexity of the position really as we head into October. Then Mike is going to say a few words about his interactions with the various government authorities. He's spending a lot of time discussing sanctions issues with the EU bodies, the US and the UK, and also talk about what might be coming down the road. I'm sure a lot of you on this call will have heard different things about the oil price caps, and Mike's going to take us through where things stand as far as we know where they stand now. And then David's going to talk a little bit about the way that North as a club approaches these sanctions issues. And he's also going to talk a little bit about the grain corridor, which I hope will be of interest to some of you as well. So that's it. There will be plenty of time for questions at the end. So as I say, at any point during the call, please do just leave a question in the chat box and we'll deal with them all at the end. Great. Well, as I say, we're going to start by just looking at taking a helicopter view of where things stand at the moment. And I think there's a few really critical messages that we want to try and get home here. Firstly, as with nearly all sanctions queries, it's a case of considering both the parties that you are dealing with and also the cargo being transported. There are really significant restrictions, both in terms of who you can do business with, but also what you can carry. Second, and this is not a Russian sanctions point, this is a sanctions point in general, you need to consider the impact of sanctions not only on you as a business, but also what is the impact on your business partners. And yes, that does include insurers. So you as a business, for example, may think, okay, we need to follow and comply with EU sanctions, but we're not a UK business. So we don't need to comply with UK sanctions, whereas us as an insurer, of course, need to comply with UK sanctions as well as EU sanctions. So it may be that you look at a voyage and think, yeah, okay, I'm comfortable that I need to comply with EU sanctions. I'm comfortable that this is compliant with EU sanctions, but it may cause an insurance problem if that activity is not permitted by the UK sanctions. And as we'll discuss a little bit, UK and EU are broadly aligned in their attitude towards Russia and indeed the restrictions which have been brought in. But there are significant differences. And just because you're compliant with EU does not mean necessarily that you would be also compliant with the UK sanctions. And then the third key message that I really wanted to try and drive home, and I'm sure this is something that nearly all of you on this call will be painfully aware of already, all trade with Russia now is inherently high risk. One of the purposes of the sanctions is to discourage trade, and their complexity, the sanctions complexity, is a means of achieving that. And of course, that complexity means that for those companies that want to continue to trade in lawful Russian cargoes, that means it's even harder to navigate than ever. And again, I'm sure some of you on this call will feel a sense of frustration that even when we have had sanctions imposed, the clarity and understanding about what those sanctions actually are supposed to mean has not been there. And we've all seen, I'm sure, the FAQs in relation to the carriage of coal from Russia to third countries and the absolute confusion which that has caused. So we're in a position now where it's getting more and more complicated. The UK and the EU legislation in particular is extremely lengthy, extremely detailed, and even if you can read the EU regulation, you have to then also look at the FAQs and look at the wider political landscape to try and establish what those restrictions actually mean. So turning to I mentioned that there's two categories of sanctions really that you need to concern yourselves with. The first is parties and the second is cargo and activities. One of the features of the Russian sanctions has been that there's been a real targeting of specific individuals and oligarchs, and there's been less targeting of the companies which they have an interest in. And this has really led to some really difficult questions about whether particular companies are deemed sanctioned because they're associated with an individual who has been sanctioned. And this is a real challenge both for members and for anybody dealing with Russian businesses now, because the EU have made it clear in responding to questions through their FAQs. What they say is that it's only the persons and entities listed in the regulation which are directly targeted. But, and this is an important but, if the listed person is deemed to own or control a non-listed entity, it can be presumed that the control also extends to the assets of that entity, and that any funds or economic resources made available to that entity would reach or benefit the listed person. So basically, the message is you need to be very, very careful if you are dealing with a company which may be controlled or owned by somebody who is listed on one of the sanctions lists. And the EU go further because one of the features here has been that individuals have been sanctioned. And then you'll see often there's a paragraph explaining why that individual has been targeted by the sanctions. And in that reasoning, often it will list companies which they're associated with. So not necessarily that they own or control, but just there's an association there. And the EU FAQs on this point say, strictly speaking, only the person and entities which appear in the name column in the annex are directly subject to the prohibitions. However, these restrictions can affect transactions with natural or legal persons, entities or bodies associated with them, some of which happen to be mentioned in the identifying information and or reasons column. Operators need to exert the highest caution when dealing with associated persons and entities. So if you have an individual who is sanctioned, Russian individual or oligarch who is sanctioned, and in the reasoning why they're sanctioned, there is a company named, even if that company is not expressly named on the sanctions list, the EU is saying you need to exert the highest caution when dealing with those associated persons or entities. The final further complication when it comes to parties is really that we shouldn't forget EU sanctions are enforced at a member state level. And one thing that I know a lot of companies have done is that they've gone to the competent authority in their member state and said, look, we want to deal with this company. We think they might be associated with this individual. What's your view? And then they've got some non-binding guidance. It may be that there's a lack of consistency sometimes between what individual member states may say. And again, even if, for example, you had a Greek authority saying, well, we're reasonably comfortable in, we don't believe that this company may be sanctioned. If that individual is also sanctioned under the UK sanctions, for example, that may give us a problem in providing cover if the UK authorities take a contrary view. So that's just a few words about the parties, which is part of the first part of the investigation that you should do. The second issue is the cargoes and activities. And the way that the sanctions developed, we're obviously expecting an eighth package from the EU this week. It's been sanctions upon sanctions upon sanctions upon sanctions, and the underlying regulation has been amended and amended and amended and amended, and now it's hundreds of pages long. And sometimes you get the feel that actually when the amendments have been made to the regulation, they're kind of just pushed in there, and they don't particularly work in context of the regulation as a whole. And it makes it really, really challenging to work out which cargoes are actually prohibited. You have to go into the regulation, and on the screen now, I've just put a summary which you'll find on our website of the EU Russia cargo sanctions. You have to go into the regulation 833 2014. You have to go into that regulation and look at the article, then go into the annex to the regulation and find out whether the goods are actually listed there. So you might need a CN code, for example, to establish whether the cargo that you want to carry is prohibited. And one thing that's striking from this chart, I hope, is that actually there's restrictions both on cargoes going from Russia and to Russia. So it may be, for example, permitted to take some iron and steel products into Russia, but it's not, if you're dealing with a listed iron or steel product, you can't take them from Russia. And even where the cargoes are targeted, and coal and fertilizer is the obvious example here, there has been a little bit of toing and froing, and that's probably an understatement, about whether they're actually permitted or not when you look at the FAQs which accompany the regulation. So it's not really enough simply to look at the regulation, look at the annex, also take a look at the EU website and see whether there's any FAQs which deal with the cargoes that you want to carry. We're also, and as I say, the EU cargo sanction summary is on our website. We're also going to add in the UK Russia cargo sanctions. It is challenging. Again, there's a lot of overlap here between the cargoes which are targeted by the EU, but the UK list is not identical. And as I say, as an insurer, we have to be very, very mindful of the UK sanctions as well as the EU sanctions. So we will be looking at both areas, and we would only be able to provide cover if we're satisfied that there's no prohibition in either the UK or the EU. Finally, I would just say on the cargo side, and indeed on the party side, I've spent most of this 10 minutes or so just talking about the UK and the EU position. Of course, we shouldn't forget also the US sanctions. US are very active when it comes to Russian sanctions, but a lot of those restrictions are dealing with cargoes going to or from the States. So what we're finding is it's really the UK and the EU restrictions which are having a much heavier impact on what members can and can't carry, and indeed what we can and can't insure. So it is complicated. I think, as ever with sanctions issues, you look at the parties, look at the lists, but just because a company is not on that list, that's not a green light that you can necessarily deal with that company. There is ownership, control, association, which has to be looked at as well. And then on the cargo side, it is really, really tricky now, just because of the number of restrictions. So say we're going to get an eighth package later this week on the EU side, which is going to add even more restrictions. And it is fairly painful exercise, but for you as members, there probably is no substitute for actually going into the legislation or getting a legal advice on whether goods are prohibited and whether you can carry them to or from Russia. So that's kind of helicopter view of where we are. I'm going to hand over to Mike now, who's going to talk a little bit about his discussions with the various government authorities and where he sees the direction of travel going at the moment. Mike, over to you.
Thank you, Mark, and good morning, good afternoon, good evening, everybody. Neat segue actually from Mark. One of the biggest challenges for industry in respect to Russian sanctions relates to the fact they're being led principally by 3 jurisdictions, but then supported by a number of significant others. So the G7, obviously, including Canada and Australia. The international group has good dialogues ongoing with the 3 principal ones. That's the European Union, which is DG FISMA, the UK, which is Its Majesty's Treasury, and also the US OFAC Treasury, and also the State Department. Now, unique in this sanctions program is that they're all placing quite a high reliance on their ability to target financial services that are necessary for marine transport to enforce their sanctions program. So historically, I think if a ship owner broke sanctions, then they would be the sort of the principal target for sanctions enforcement. Now, marine services is at least on a par with the ship owner, and probably there's even more focus on them in this particular sanctions program, which makes it a little bit uncomfortable for your banks and marine insurers. So the 3 we are talking to then in the EU, it's DG FISMA. This is the Directorate General Financial Services and Capital Markets Union, and the commissioner there is Mairead McGuinness. We actually, at the IG, have the least well-developed contacts with this department of the 3 big sanctioning authorities. And that's, as Mark referred to, that's quite actually unfortunate because they are by far the largest and most relevant sanctioning authority in the current Russian sanctions program. The UK, it's His Majesty's Treasury. UK is seen by its G7 partners and the EU as having oversight of marine services. And because of the focus on marine services, particularly when we start talking about the oil price cap, they have quite a significant role to play. And then finally, we've got the US, where it's Treasury and OFAC, the sort of old suspects. The big point about the US is Mark quite rightly says they've not been so relevant up till now, unless you're a US entity. But they will become so much more when we get around to talking about the oil price cap, because that's very much a US initiative through the construct of the G7. So I'm going to spend a few minutes just saying where we've got to with each of these bodies and what we're expecting to see in relation to the oil price cap coming later this year. So with the European Union, we met them most recently last Tuesday. When I say met, it was not a physical meeting, it was a Teams meeting. The purpose of that meeting really was seeking some clarification on the legacy issues arising out of their handling of the coal and fertilizer ban. You will recall that initially we all thought that European ship owners and European insurers, or those falling within the jurisdiction of the EU, would be able to carry and insure coal going to 3rd countries after the 10th of August. That position was reversed on the 10th of August by FAQs, and the interpretation that the Commission was placing on their legislation, which under which they said such trades and the insurance of those trades was prohibited, was reinforced by further FAQs on the 29th of August. And then abruptly on the 19th of September, they did an about turn. And one of the purposes of that meeting was to explain what the consequences of that about turn were. First of all, their initial interpretation where they sought to prohibit that trade was deeply unfortunate because it came without warning and it was not the natural reading of the legislation. I think it caught pretty much everybody out, certainly ourselves and most marine sanctions lawyers. Having seen a number of insurance contracts having to be cancelled and a number of charter parties stopped at short notice, for the EU then to reverse that position was also somewhat unfortunate. So we went at some length, we've explained the problems with this sort of approach and what the consequences are. And it's fair to say that the EU and the people who are drafting these sanctions legislation are quite far removed from the shipping industry and probably had very little appreciation of the difficulties that they were causing with their change in approach as articulated in the FAQs. They understand the difficulties they've now caused. I'm confident of that. But their difficulty is that whilst there may be a policy objective set out by the Commission, ultimately the Commission is the servant of 27 individual nations, and their approach is always going to bend to try and accommodate consensus across the 27 nations that comprise the European Union. What does that mean for us as insurers, you as ship owners? Well, it means that we can't really rule out further changes of interpretation reflecting political will or changes on the ground. So, for example, if you saw further attacks on Western infrastructure, such as whatever's gone on with the Nord Stream pipelines, the referenda, use of nuclear weapons or other weapons of mass destruction, such as chemicals or biological weapons, all of those are things that could change the way in which the EU chooses to interpret its legislation. And again, referencing back to Mark, any trade with Russia really carries very high risks now of a changing legal and insurance and marine services environment. Not very satisfactory when you're trying to plan ahead, I know, but really we're just trying to communicate the approach that is coming out of the European Union from our contacts with them. One issue that's making me very nervous in relation to the European Union at the moment is that the Commission has yet to confirm that clubs and other relevant marine insurers will be free to continue to handle claims that have arisen during a period when the voyage is lawful but has subsequently become unlawful, for example, after a wind down period. So as yet, we do not have confirmation that we will be able to pay claims that have arisen during a lawful voyage once the wind down period has expired in relation to coal, fertilizer, and the other goods that fell within that piece of legislation. That would be the 10th of August, and for oil that's coming up, that would be the 5th of December and the 5th of February, depending on the type of oil product it is. We have explained the consequences if they were to adopt a hard line view of this, so that we wouldn't be able to pay legacy claims. There's still claims that have arisen out of the Prestige, which was Russian oil. If we take a logical interpretation of what they have been suggesting, we wouldn't be able to discharge those liabilities, for example, really quite unprecedented. I do believe they now understand the significance of their initial view, and we hope to have a response to that shortly, but it illustrates some of the difficulties we're having in communicating the needs of ship owners and shipping and insurance to the people who are actually drafting the legislation. Finally, in relation to the European Union, we've raised the issue of the proposed oil price cap. It's not yet entirely clear whether the European Union is intending to legislate to permit marine services to insure Russian oil sold at or below the proposed price cap after the 5th of December and 5th of February, but we do expect that to happen. Certainly, that's the message that the EU Commission is giving out. But as we've said, there's a variety of views within the European Union, and ultimately the Commission is the servant of the member states. And whilst maybe the maritime nations such as Malta, Cyprus, and Greece may well be very keen to see them having the ability to continue to trade or carry Russian oil, the approach of the Baltic states, more hardline nations, maybe rather different. And consensus is required if we're to see a relaxation in the marine services ban that accompanies that is part of the regulation 833/2014. The other point about the oil price cap, which I think is worth mentioning at this stage, is that it's reliant on the UK and the US legislating for a parallel oil marine services ban to that currently in force with the EU, and then all three plus the G7 nations introducing some sort of identical marine services exception for cargoes at or below price cap. At the moment, there's an awful lot of talk in the press about the oil price cap, but the only piece of relevant legislation that's currently in force is the EU oil ban, which, as we know, comes into effect from the 5th of December, at which point marine services which are subject to the jurisdiction of the European Union are not able to provide those services to vessels carrying oil outside the Union. There are likely to be three price caps, that's our current understanding, one for low viscosity crude oil, one for high viscosity crude oil, presumably both coming into effect on the 5th of December, and then one for petroleum products, which will accompany the 5th of February ban. Last week, moving on to the United States, last week the international group was in Washington, had a series of meetings out there. It's fair to say that the focus of those meetings was all about the oil price cap. and you'll be aware now that there is a significant industry outreach underway. So it's not just the marine insurance industry that the United States and others are talking to. 2 weeks ago, I understand that there was a significant outreach exercise to banks in Paris. And the person who led that was a senior policy advisor from the US Treasury, a lady called Claire McCleskey, who presented. Um, we also know that they've been talking to oil traders, Trafigura, for example, and some businesses like BP and so on to really sort of test what they're trying to implement on the 5th of December. In relation to the oil price cap, you might also, I'm just going to put in the chat box now a link to the preliminary guidance that's been published by the United States. That is just what it says. It's preliminary guidance. It's likely to change. One of the things I thought was quite interesting about that is when you read it is that the US Treasury had sort of confused the idea of the shipper and the ship owner. And I suppose some of us might say, well, that's a rather basic mistake to make. Equally, the fact they pushed it out and are receiving comments on it means that it can be corrected before the oil price ban and the price cap mechanism comes into effect. What we're emphasising as an industry, and we'd be interested in comments coming from you as ship owners as to the matters that you feel also ought to be raised, is a number of points. But the first and foremost really is the need to ensure consistency of sanctions legislation and oil price cap exemptions when they all come into force. As I said, for all the talk about the oil price cap mechanism, the only relevant legislation currently in force is the EU regulation, which prohibits the provision of marine services to vessels carrying oil outside the EU from the 5th of December. So when the US and the UK legislate, we're arguing very strongly that it needs to be absolutely aligned with the position that the European Union is taking. And similarly, the exemptions for marine services also need to be as near as possible identical. We've also emphasised the importance of avoiding the use of secondary sanctions to enforce the price cap. Essentially, this is an unusual sanctions program because it is designed to enable a trade rather than to prevent it. It's just that that trade is heavily controlled and restricted to cargoes that have been sold at or below the price cap that will be imposed. If the US were to introduce secondary sanctions, I think that would be a significant disincentive to businesses to participate in it, particularly within financial services, and that would frustrate the whole purpose of the oil price cap. And I think that message has been accepted. We also need to see the prohibition and the price cap exemption as early as possible. Realistically, we're looking at the end of October, I think, before we actually see the legislation from the UK and the US, and also the marine services exemption from the European Union. That doesn't give industry, you as ship owners, us as financial services providers, much time really to work through the detail and understand the risks involved in doing that trade and the practical implications for it. But I think practically speaking, the end of October is going to be the earliest date at which we'll actually see it. US compliance expectations. We're concerned a little bit about the US because they obviously have a robust record of enforcement in the past. And what you will see is that whilst I think we've been successful in persuading them that ship owners and insurers should be in tier 3, so the lowest category of compliance in the guidelines that I've just sent around, they're also suggesting that in addition to simply viewing some sort of confirmation that the cargo has been sold at or below the price cap, that customary due diligence also take place. That sounds relatively benign, save that they've referenced the Marine Advisory of May 2020, which does actually impose some quite onerous expectations, obligations on ship owners and marine insurers in relation to what they believe would be customary due diligence. So we've suggested that some of the guidance in that may now actually be out of date, and they should perhaps consider revising that if they make any reference to it at all. We've also suggested a template attestation for industry, which would be quite helpful, so that you actually know what sort of information we're expected to request. I think we've won the argument that ship owners and insurers should both be considered tier 3 actors. Initially, there was some confusion between the role of the ship owner and the shipper, and shippers certainly would have had a higher compliance expectation than a tier 3 actor such as an insurer who has no direct knowledge of the price that the cargo is being sold. The other big point that's concerning me at the moment is the problems that are going to be associated with vessels that are identified mid-voyage as carrying a non-compliant cargo. This is going to be a particular problem with the oil price cap because even the United States is expecting high volumes of non-compliant cargo to be traded. The reason they're not too worried about this is that, in their view, the oil price cap is already having an effect because Russia is going out and seeking to do deals with, certain non-EU, non-G7 countries for the sale of oil at significantly discounted levels. So the mere threat of the price cap is already having the effect of depressing the revenues that Russia is deriving from its oil, in the opinion of the United States. But what that does mean is that when you're a ship owner or an insurer with no real direct access to the price being sold, there is a high risk that we might end up carrying or insuring vessel carrying non-compliant cargoes. What has happened in the past where there's been a breach of sanctions is that vessels go off risk, banks start to refuse to deal with the ship in question, and the ship becomes a stranded ship without cover, stuck with a cargo on board that it can't get rid of. So we are arguing firmly that the G7 need to think about this particular problem, because I think it will be a real practical problem when we get into the operation of the price cap come December, and that they ought to consider some means by which vessels can remain on risk whilst the cargo is discharged into some secure compound where it can be dealt with and the non-compliant trade frustrated on land rather than being left on a vessel for extended periods. And as I said, we're expecting all of this to have first sight of the legislation that's being proposed towards the end of October. A few words about the UK before I hand over to David. The UK is seen as important because it's basically the centre of the marine services industry, and as I said right at the start, there's considerable focus on marine services as the way in which to enforce a large part of the Russian sanctions program, but certainly the oil price cap. For what it's worth, the UK have been very open to dialogue with the group, and I think anybody else who wants to talk to them, they are heavily aligned to the US position, very supportive of the oil price cap. They are listening to us, and they're also helping industries to convey words of caution to either the EU or the US. And I think that's probably all I'd like to say at the moment. So there is active outreach. I'd be very interested in hearing from ship owners as to what they feel ought to be highlighted. I'm acutely conscious of the fact that neither the USEU nor the UK has really engaged with ship owning associations yet, despite the fact that we've been telling them to do so. And therefore, the ship owner's voice in these sanctions programs is probably not being fully heard as yet. And I think that's something that needs to change before the oil price cap certainly comes into effect on the 5th of December. And with that, I will hand over to David, who's going to talk about a range of issues, including the grain cargoes out of the Black Sea. Thank you.
Thank you, Mike. So yes, I'm going to talk about our approach to cover, providing assistance, and touch on the grain corridor. The situation broadly relating to the conflict in Ukraine has given rise to a number of challenges for us and for members. We've seen a significant amount of inquiries, including sanctions inquiries, though as yet this hasn't resulted in a substantial amount of P&I claims, and that's likely to be because the losses and the costs generated for owners and operators by the conflict largely relate to war, which is an excluded risk under standard P&I terms, and in effect transferred to war P&I underwriters. So, for example, although we provided practical support, war P&I picked up the costs of evacuating crew from Ukraine from trapped ships at the outset of the conflict. Equally, while we're assisting members who have ships trapped in Ukraine to use the grain corridor to depart, that's largely a mitigation of a risk faced by the hull and machinery insurers. So day to day, we're dealing with a very high volume of sanctions inquiries related to trade to Russian ports or in Russian origin cargo. And as Mark and Mike have both mentioned, this trade is inherently risky due to the sanctions regimes, and so, as we understand it, attracts a fair premium for doing the business. But that highlights the need for members to be comfortable with the risk they are running. As a club, we aren't able to perform members' due diligence for them, and we can't give an absolute confirmation of cover before a claim arises, but we will provide assistance as best we can on what are often quite complex questions, but accompanied normally by a warning that even where cover is in place, there are going to be practical difficulties if an incident occurs at a Russian port or terminal. For example, in the provision of security, appointment of surveyors, or with making claims payments through the banking system. And it's also a fact that the sanctions regime and how it's interpreted by national states and supranational bodies is constantly changing. And so what we as a club can cover today, we may not be able to cover tomorrow. And again, Mark and Mike have both mentioned the EU, for example, which essentially has everyone constantly on notice that further sanctions are coming, and those sanctions are naturally going to change the landscape. And we can only really advise on the basis of the information and the guidance available at the time. And so it's vital that members who are undertaking this high risk, high reward business need to make their own decisions as to whether they're comfortable with those risks. When a claim does arise on these trades, then we are going to need to perform some sort of internal checks for our own compliance reasons before we can provide assistance to members. As a very first step, we're probably going to need to check that the member has complied with our circular 2022-017, which was issued in May 2022, laying down a requirement under UK law under which clubs have to receive notice from members with certain information provided each time a ship calls at a Russian port or transit Russian waters. That's the so-called SPIRE notification system, which is going to become increasingly important as the oil ban comes into place. And we won't be able to provide claims assistance until we're sure that SPIRE notice has been received where it's required. Another area where we're heavily engaged, has been mentioned, is providing assistance to members who plan to use the UN Grain Corridor. Its official name is the Black Sea Grain Initiative, but that's possibly not a very accurate name because it also covers other foodstuffs than grain and fertilizer exported from Ukraine. For those who aren't aware, it's a humanitarian maritime corridor which allows ships to export the cargoes covered by the agreement from Ukraine and is facilitated by a Joint Coordination Centre, or JCC, established in July 2022 in Istanbul and comprises representatives from Russia, Turkey, Ukraine, and the UN. And there are very detailed procedures published by the JCC for the use of this corridor, what's permitted, and when they will issue essentially a ticket to use the corridor. All of those procedures are set out on the JCC's webpage, which is hosted at un.org. From a club point of view, there's no impact on cover solely due to the use of the corridor, though it's important that members consult with their other insurers, particularly with war risk underwriters, given the risks of using that corridor. But we're aware that more than 100 vessels have used the grain corridor since it was established. A number of ships that were trapped in Ukraine have been able to use it to leave. One has to say that the corridor is intrinsically unstable because it relies on what is in effect a political ceasefire between two nations engaged in a military conflict. But those who were involved in its creation and its implementation, who speak publicly about it, seem sure that it will hold in the short term to medium term, because it has this aim of ensuring world food security. Now, as I mentioned earlier, ships trapped in Ukraine have been able to use the corridor to leave, as long as they're departing from a port covered by the agreement. Those ships that don't have cargoes on board covered by the agreement will be able to use the corridor, we're told, provided that the non-compliant cargo is taken off, for example, steel, and some compliant cargo is put on board. So in one case, a ship loaded about 500 metric tons of grain and was given a ticket to leave. But ships that are at closed ports, not covered by the agreement, the prospect of those ships leaving imminently remains fairly bleak. So with that, I will hand back to Mark.
Thanks, David, and thanks, Mike. We'll turn to the questions now. I can see thanks for those that have already posted. I can see a few in there already. Let's see. So we've got a question about coal, a couple of questions about coal, perhaps unsurprisingly. One, we know that from Christel, we know that Russian coal is sanctioned by the EU, but if coal is not Russian coal but loaded in Russian port for Europe, will there be an issue? And then there's another question for Pranita. What if coal is not of Russian origin but has transited through Russia and to be loaded from an EU port? Could that cargo pose risks as well? Well, I know there's, as we've discussed today, there's a little bit of a danger of just looking at the EU regulation and taking that as gospel, because there's always the potential for FAQs to contradict what the regulation says. However, the regulation in relation to coal does say it shall be prohibited to purchase, import or transfer directly or indirectly coal and other solid fossil fuels into the Union if they originate in Russia or are exported from Russia. So the prohibition is twofold. It's on cargo, on coals originating in Russia or being exported from Russia. Now, importantly, as I think Mike mentioned, the clarification from the FAQs is that if that coal is going to a third country, then it's possible to carry that cargo, and it's also possible for us to provide cover, which is I would say, the natural meaning of we've kind of ended up in the position that probably we always should have been, based on the wording of the regulation, which is a prohibition on coal coming into the Union if it originates in Russia or is exported from Russia. Mike, there's a question about the expectations for oil trading outside the EU after December the 5th for managers based in the EU. I guess this is, as you were mentioning, Mike, this is the reality of the position at the moment is there is an insurance ban in place. Up until 5th of December, we can provide cover if the insurance contract precedes the sanctions, but there isn't yet a ban on carrying oil from Russia to third countries. Is that likely to change with the oil cap?
Yeah, thanks, Mark. It's a really good question, actually, and I think the point is we don't actually have the legislation yet, so all we can really give is our expectation based on the contacts we've had. So what are those expectations? Well, I expect that both European Union ship owners and non-EU ship owners will be able to carry Russian origin oil to non-G7 EU states after the 5th of December. If you're an EU ship owner, I suspect that you will have to comply with the oil price cap. We don't know that yet, but that would be the most logical outcome of the discussions that are currently underway, so that if you're an EU owner, you will only be able to carry that oil if it's been sold at or below the price cap. If you're a non-EU owner, then in theory there's nothing, or G7 owner, then there's in theory nothing to stop you carrying cargo that have been sold above the price cap. And as I said earlier, we don't currently expect the US to enforce the price cap through secondary sanctions. But the problem for well, what is consistent with the EU ship owners' carriage, but the problem for the non-EU owners' carriage, where the oil is sold above price cap, would be that you won't get insurance. Your financial services won't support you where the cargo has been sold at or above the price cap if it's going to one of these non-G7, non-EU countries. And you know, we're looking really at any financial services or marine insurers that are based within the G7 and European Union. So that's really quite all encompassing. But in theory, you could get the insurance from Ingostrack, so there'd be nothing to stop an Indian ship owner taking cargo from Russia to India, backed by Ingostrack Insurance or some other alternative non-EU G7 provider of insurance. Whether you're able to sort of jump in between trades or not, I think that's going to be very difficult going forwards. But that's really how it seems to be starting to develop at the moment. So I hope that answers your question.
Thanks, Mike. We've got a question related to the carriage of grain, David. This says there's been accusations today that Russia have stolen Ukrainian grains worth 530 million, as per the Associated Press. Considering that cargoes used to support Russian economy are banned, do you consider that sanctions over grains could be imposed sooner or later?
I'd be doubtful about that. I think what you've seen in the corridor is this imperative to get those sort of cargoes exported for reasons of worldwide food security, and those say that were involved in the creation of the corridor emphasize, you know, the sort of the good press angle that both sides get from doing that, which is why there is political will to do this. And it's quite remarkable that this was established so quickly in a conflict situation. So I imagine that authorities will be very slow to sanction food cargoes, particularly. There may be party sanctions, of course, for those involved if it's happening in stealing Ukrainian grain cargoes, but I doubt we would see sanctions against the cargo itself if it's Ukrainian origin.
Yeah, I think I obviously agree with that, David. I think even where we've seen really stringent sanctions programs like Iran, actually grain and agriculture products have tended to be outside of those sanctions that have been imposed. Having said that, and I think it goes back to a point that Mike made, this is so political that actually there is a clear direction of travel, which is more and more sanctions, and who knows where we're going to be in 2, 3, 4 months time. Eventually there will run out, there will be a lack of things left to sanction if the EU still want to show that more things should be sanctioned. So it's a question that we get asked a lot, you know, is this voyage going to be okay? And we can take a view on the likelihood of sanctions being imposed today. What we really struggle to do is actually take a view on what the position is likely to look like tomorrow. Mike, I don't know whether anything that you wanted to say on grains. So I think you're on mute, Mike.
No, I don't really have very much to add. There's been very little discourse with the big authorities on grains up till now. It's really been focused on oil most recently, and to a lesser extent on on coal and fertilizer with the European Union. So I don't see anything really coming in that from them in the near future.
Yeah, thanks. A nice question here from Lars saying there was an EU ban on maritime services, insurance and finance in respect of cargoes from Russia to third countries for coal and fertilizer from 19th of August, crude oil from the 5th of December, and refined oil products from the 5th of February. The ban on coal and fertilizer was lifted by FAQ language. Do you think the same will happen for crude oil and refined oil products? And I guess this goes to a discussion that we've been having frequently with a lot of members over the last couple of months, which is the status of the FAQs as against the regulation. Now, the regulation is the law. The idea of the FAQs is to help the member states to enforce the law. The idea is that the FAQs do not themselves make new law. Now, unfortunately, the EU got into a little bit of trouble, I think, on the coal, and basically tried to change the position a couple of times through FAQs. I would very much hope, through the work that Mike and others have been doing, and the fact that we have emphasised to them just how unsatisfactory it is to try and make law by new FAQs, that when it comes to oil and refined oil products, what we will get is an amendment to the underlying regulation and some real clarity. Mike, I don't know whether that's wishful thinking or.
I think that's absolutely right, Mark. I mean, it would be extraordinary, wouldn't it, if they introduced the marine services ban with through the FAQs. I'm not expecting that to happen, and I'd be very, very disappointed if it did, because the FAQs, I think, have not helped us very much in industry in terms of interpreting the legislation, particularly where they're changed quite frequently. If I was being cynical, which you tend to get after you've been doing this for a while, if there was difficulty achieving consensus within the European Union between the member states in relation to how the marine services ban to enforce the oil price cap might work, then they may resort to the FAQs. That is what perhaps what they've been doing earlier, is rather than trying to change the principal primary legislation, they found it easier to provide guidance through the FAQs as to how something should work. But I think that would be deeply unsatisfactory for all of us, and would probably create far more problems than it would resolve. So good question, Lars, but I'd be very surprised if there wasn't an amendment to 833/2014 to give effect to the marine services exemption to enable cargoes to be insured where they're traded at or below price cap.
Right, thanks, Mike. Got a couple more questions. I'm conscious that we're running up to our scheduled hour as well. So if you have got any final thoughts or questions that you would like us to have a go at answering, then please do post them in the chat box now. A couple of questions that we've got left. Demetrius, a listed company having a head office in Switzerland instead of in Russia can also be considered as sanctioned. Well, I think the answer to that is yes. You know, one of the things that we try and I think that it is clear when we're talking about sanctions that it is a global risk, and you do have entities and individuals who are sanctioned, whether it's under the Russian sanctions or any other sanctions regime, who may be outside of that particular country. So, you know, under the Iranian sanctions, you might have a company based in London, for example, who is a subsidiary of an Iranian entity who is deemed sanctioned. So it's not just a case of looking at Russian companies. It may not be apparent. You know, I know we've had a couple of companies based in the Channel Islands, for example, where it may not be apparent just from the name of the company and their location that they are actually Russian controlled. So you have to do a little bit of digging and make sure you're satisfied, as we were talking earlier, that the ownership and control and association questions are clear. Now, actually finding out sufficient information about the ownership and control of Russian companies is challenging, which goes back to the point we were making earlier about this inherent risk, which is there when it comes to sanctions. I think there's one final question from Amanda around does Ofsted have a mechanism by which a party can apply for a license to receive funds from a third-party account with a UK bank, where that third-party account is held by an EU-sanctioned entity, but the liability predates the sanctions coming into force? Now, I'm not aware of having gone down haven't got any recent experience of applying for a license in these circumstances. So I'm going to look at David and Mike and hope that one of them wants to jump in. David, you've unmuted yourself.
There was a webinar done by Ofsted where they spent most of their time talking about licenses like this. Not something I think as Mark says we get involved in very often, but it seems that a lot of their work is in granting these licenses. So I think possible, but the impression I got is that they are overworked and that they're focusing on almost humanitarian issues, you know, paying people that can't pay for really sanctioned individuals that really can't pay for basic things.
Yeah,
things go.
I'd endorse that. I think it's. I don't see any reason why you wouldn't be able to apply for a license in those circumstances. It'll obviously be very much based on the facts of your own case, but the speed with which they would deal with it, and whether they would be quite content to just see the money paid into a blocked account, or just held, pending the resolution of the war in Ukraine. That may well be the outcome.
Thanks both. And then maybe final question from Johanna. In a scenario where owners chartered their vessel to a company potentially owned and or controlled by a sanctioned individual, should owners consider to carry out repeated sanctions checks on their charterers for each cargo voyage? This is, I think, a really good question. There are a couple of points here. One is that it's really important to make sure that in your charter party you've got good sanctions clauses, maybe the latest BIMCO one, to ensure that if it turns out that your counterparty becomes sanctioned or the ownership or control of that company changes during the course of the CP, that you've got the ability to get out of that contract and even better claim damages for your losses. And secondly, it is important not just to think, okay, well, we've got the charter party clause in there that we want. We've done our sanctions checks on fixing, and therefore we're okay, because there are names being added and removed from these lists almost every single day. Now, I know a lot of the software you can purchase, like the Thomson Reuters World Check system that we use, they will provide an update if the status of companies that you've logged onto that system changes. So ideally, you'd want a system whereby if there was a change in status, then you would get notified even before the next cargo voyage. But certainly, I think it's a really good idea, not just to think, okay, well, we've cleared these counterparts on fixing. That means we will be okay, because particularly now, where we're 8 rounds into EU sanctions, we're having names added, names removed, the ownership and control of companies shifted around in Russia to try and escape the sanctions. It's really, really important to just have that continuing due diligence obligations at the forefront of everybody's minds. So I think all I'd like to do now is just thank you all for attending. So one final question. We've got 2 minutes left. Just popped up. And as it's addressed to Mike, I will post it over to him. Mike, could you please clarify what you said before about the Commission not having confirmed payment of claims by the insurer? So I think, Mike, this is the point about after the end of wind down period. So whether it's coal going into the EU, which the wind down period is now completed in August, or oil going to third countries where the wind down period ends on the 5th of December. What happens after those dates?
Yeah, thanks, Sophia. It's good to highlight this because it's a really big point. Now, in all previous sanctions programs, where a trade is lawful and then becomes sanctioned, we haven't been prohibited from dealing with claims that arose during the period of lawful trade prior to that trade subsequently becoming unlawful. It might have been that payment to a certain individual is not possible because they become designated or listed or subject to an asset freeze, in which case the money would be paid into a blocked account, but it would be paid and then could be released at some later stage when the sanctions were released. The EU seems to be struggling with this, and at the moment, despite the fact we've made it very clear to them what the consequences would be, they're not yet able to confirm that we will be able to pay a claim on a tanker that is currently carrying Russian oil, where that claim is presented after the wind down period on the 5th of December. And that's all in the context of coal for trades that were lawful up until the wind down period expired on the 10th of August, but now are being presented now for payment to the association. So this is a really big point. I'm cautiously optimistic that common sense will prevail. We've made the point to the Commission how ludicrous this would be. We've also explained or commented on the Commission's position, both to the UK government and also the US, who understand the magnitude of what the Commission might be suggesting. So I'm cautiously hopeful that common sense will prevail and we'll be able to deal with claims after 5th of December, where they arose during a period of lawful trade, but payment falls due after the 5th of December. So I can't really give you much comfort, but I'm hopeful that we will get that point clarified in the short to medium term. Thank you.
Great, thanks, Mike. I'm conscious, I know a couple more questions have popped in. I'm conscious that we are up to the running time now, so just thank you all for attending. If you do have any questions, then please that haven't been answered, or you've got any questions in the coming weeks, then please do just drop one of us a line. So say we're all dealing with sanctions issues every single day of our lives, and please do just get in touch with any questions, queries, or comments that you might have. And just leaves me to wish you all a good rest of the day. Thank you for coming.